where Y is the number of units sold and X is the number of the month. Monthly deviations from the trend allow an additive model. The forecast number of units of product are to be sold in the month 23, which has a seasonal factor of plus 6.5 to the nearest whole unit. Okay, so here how do we solve this? This is the equation given. Y is equal to 9.72 plus 5.816x, where Y is the number of units sold. X is the month. So replacing the time period X here, we are asked to find out what is the value of Y. And the month value is given as 23. So now X value is the time period 23 X value. That would be so we got the value to be as okay. We got the value of Y as 143.49. But there is also a seasonal factor given as plus 6.5. So this has to be adjusted. The seasonal component, whatever is mentioned, that is to be adjusted. So add seasonal factor. And how much should be the adjustment be? It is plus 6.5. So we have to add 6.5. So round it off, right? Round it off to the whole value. is 150 units. So y is equal to 150 units based on the linear equation, which is equal to y is equal to 9.72 plus something is given. The time series of x, the time value is represented by the variable x. X is calculated for the number of months, and then for the month of 23rd month, if we are to forecast the value comes out to be as 143.49. But there is also an adjustment of seasonal factors, which is plus 6.1, which is added. So the answer is 150. Proceeding further with that, 140 is done. Earlier we have finished 141 and 142 under high low cost method. So the next in the number is 143. Let's take it up 143. You're aware that Monday's class is from 4 to 5, no? Maybe she joined in at 5 to 6. Maybe she joined in at 4 o'clock and then assuming no one's there and she left the class. Leave.
Yeah.
Okay. Okay. I didn't see the participants list. Good. Good that you joined. Which is forecasting its sales for the next year using a combination of time series and regression. Did we do this one? No, we didn't. Analysis models. An analysis of the past sales units has produced the following equation for the quarterly sales trends. Y is equal to 26x plus 8,850, where the value of x represents the quarterly accounting period and the value of y represents the quarterly sales trend in units. Quarter 1 of next year will have a value for x of 25. The quarterly seasonal variations have been measured using the multiplicative proportional model and are um, quarter 1 is minus 15%, 2 is minus 5%, 3 is plus 5%, 4 is plus 15%. Production is planned to occur at a constant rate throughout the year. The company does not hold inventories at the end of any year. What is the difference between the budgeted sales for quarter 1 and quarter 4? We are provided the with the linear equation. We have the linear equation as y is equal to 26x plus 8,850. X value uh, for the time period is taken as 25th value 25. X value is 25. Quarter 1 of next year will have a value for x as 25. So we just have to substitute that. So that is simple. That is forecasting. But the question doesn't end there. It also talks about the difference between the budgeted sales for quarter 1. Quarter 1, if we are talking about quarter 1 of the next year, quarter 1 has a value of 25. So we substitute that and we arrive at what is the value. But we are also asked to find out what is the value for quarter 4 next year. So that also has to be taken into consideration. And then we have to find out what is the value. So let's start writing the solution. Question number 143. So right now you're having the end semester exams. Is that so?
It's going to start on
When
ma'am, we have it on the 7th, the 9th, and the 12th.
okay. After that, is it semester break?
Ma'am, that is only for our department. Other departments have it till the 19th.
Okay. No, I mean, before you joined, I was asking Plessy also, what's the discussion going on in the group about change of the list? So she updated me that there is an exam on 8th, and then so the date she mentioned that
No, ma'am,
we
the
can
exam, ma'am,
postpone it. Yeah,
9th, ma'am. So they
9th
are
is the
giving us
exam.
one
Yeah,
holiday.
yeah. So one exam has to be postponed. Unless and until the semester is completely going to end, I think we can accommodate the sessions, isn't it? That can be done. It's okay. Okay, so now the equation is already given. Y is equal to 26x plus some value is given. Just if we have to find out the value for quarter one, y is equal to, for quarter one, x value is given. What is x value? X value is given as 26 into 25 plus we have 8,850. That comes out to be now we have to consider quarter four also. But what is the value of x is not given to us. So there um, we do not know what is the value of x. So how do we calculate this part? Because for quarter one, 25 is already given. Quarter four has a seasonal variation of 15%. Do you see that? A seasonal variation of 15% is mentioned for quarter four. So the value for x is given for quarter one as 25. What is the value for quarter four? How much would it be? If this is 25, uh, yesterday, the previous class, one of the questions I have helped you out with figuring out the time period. This is how we give the numbers. Do you see that? See, for some question we have done year one, quarter one, if it is 1, then 2, 3, so on. Then for the last value, year 7, quarter 3, it is 27. So the same rule applies here also. Now, what are we talking about? We're talking about the fourth quarter. First quarter is given a value of 25. So fourth quarter will have, this is 25, 26, 27, 28. It will have a value of 28. So if we are writing here as 25, then we will have it as 26, 27, 28. Simply substituting it as 28. So that's also issue. But there is a mention about the seasonal variation also. So that seasonal variation also has to be accommodated. But let's first finish it off. How do we calculate what is the value of y? Y is equal to, I hope you understood how we got it as 28. So 26 into 28, which would be okay. The quarterly seasonal variations have been measured using the multiplicative model of proportional model and R. The values, the forecasted values based on the trend is 9,500 and 9,578. But the seasonal variation is minus 15%. It is to be proportionally calculated. And for quarter 4, it is 15% plus 15%. Okay, if we are to accommodate the seasonal variation, 9,500 is the trend value, is the expected trend. Based on the expected trend, we could calculate it as 9,500 and 9,578. But 9,500 for the first quarter, there is a minus 15%. So that has to be adjusted. If it is minus 15%, whatever is the expected value at 100%, we have calculated. But the variation should be deducting minus 15%. It is not just additive model like the previous example. We have added the seasonal factor of 6 plus 6.5. Here this is a multiplicative model. So proportionately we have to calculate. What is the logic here? If 100% is 9,500, minus 15% would become 85%. So 85% is what percentage? So if this is 100%, we want it for 85%. 85% is what amount? So that is the proportionate model. So here we can calculate it as 9,500 into, we have 85 by 100. Similarly, here if this is 100%, we want plus 15%. So 115% is how much? So that is what we have to calculate. So the calculation would go as 9,578 into 115 by 100. So find out what's the difference. We are asked to find out the difference, isn't it? So find out the difference. We have to find out fourth minus first. Fourth is here minus first. So 2940. Round it off, it will be 2940. The next question is 144. The following budgeted information comes from the accounting records of Ross. We have certain items given: material cost, labor cost, overhead cost, distribution cost, total cost. What would be the budgeted cost for 2,750 units? So this is flexible budgeting. So the concept what we have learned about flexible budgeting, wherein accommodating multiple activity levels at which the activity is possible to happen in future. Even after that also, if we still find that some activity level which is actually happening is not there as a part of the budgeted figures, we can adjust that and prepare that. That is what is the question here. They have already prepared a budget at 1,000, 2,000, 3,000 units activity level, but maybe the actual was not according to that. So now they are considering adjusting that and preparing another budgeted budget at an activity level of 2,750 units. So simple thing is, what we have to do is, we have to first identify which one among them are variable, fixed, semi-variable. Variable will be proportionately varying, fixed will be the same, semi-variable we need to find out using the high-low method, which we have already learned that. So question number 144. Let's first identify which one of them are variable. Do you see any variable? First take material. So the two levels we can identify. If at 1,000 units, if it is 15,000, 2,000 units, how much should it be? If at 1,000, the logic material. So if it at 1,000 units, if the cost is 15,000, so proportionately we are finding out 2,000, how much should it be? So that comes out to be is equal to 30,000. So we see it is 30,000 only. 30,000, therefore this part of it becomes variable. That is what is given there. Okay, next comes labor. Similar, on a similar note, also find out about labor. At 1,000, it is $10,000. So how much should it be? So here it is 20,000. Therefore, this is also variable. So two items we got it as variable. Third one, overhead. Now, distribution cost, all of them are same, so it is fixed. So it is only with overhead cost we have to understand whether it is variable or semi-variable. It is not fixed because the amounts are not same. So at 1,000 units, it is 18,000. So at 2,000, how much is that? So proportionately, let's find out. It is 36,000, but the amount which is given is 22,000. Okay, so this becomes a semi-variable cost. That is how we identify. Fourth one, distribution cost anyway is a fixed cost. Now we have to prepare a budget, find out the budgeted cost at 2,750 units. Before we, since we already got overhead to be as a semi-variable cost, let's find out the variable component and fixed component. Select a high, select a low, using the high-low method. Now find out what is the fixed cost. Select any level at, let's take 1,000. At 1,000 units, we have total cost is equal to 18,000 minus the variable cost. Variable cost will be 1,000 into 4. So that's 4,000. We see the fixed cost is equal to, you can also completely find out what is the semi-variable, the overhead cost at 2,750. We can either proceed that way, or we can write separately the variable component under variable cost, fixed component under fixed cost. That is also possible. Since you have already learned about at a new level, that is at a 2,750 units level. Okay, I'm just highlighting it here. I will do that. But there is another alternative also which I will show. So if we have to find out at 2,750 units, we have the variable cost as 2,750 into 4. Then fixed cost is already known to us, which is 14,000. The sum total of these two is the total cost. So this part we have already learned. One other alternative of writing that particular amount, we'll see. These are costs. The first item is material cost. Then we have labor cost. Then we have, first let's write these things. Variable cost. Under the category of variable cost, we have material. Proportionately, it should be. If for 1,000, if it is 15,000, 2,750, how much? So the calculation would be 1,000. If it is 15,000, 2,750, how much? The calculation would be 2,750 into 15,000 divided by 1,000. Similarly, labor also. Labor, it is 10,000. For 1,000, it is 10,000. So for 2,750 into 10,000 divided by 1,000. Now, the category is, we have mentioned it as variable cost. So the semi-variable cost, overhead cost, can be split into variable overhead and fixed overhead. So variable overhead. How much is variable part of it? It is 4 per unit. So here we will write it as is equal to 4 into 2,750. So that's the variable overhead. So this gives us the total variable cost. Then write the heading as fixed cost. One is fixed overhead. Which we got it as 12,000. No, not 12, 14, sorry. 14,000. Then distribution cost is a fixed cost. From that we already understand. Distribution cost is a fixed cost, which is 12,000. So when we add them up, the total cost is equal to otherwise, if we are not separating it here, we can just write 4 items one after the other. Material will be 41,250, labor will be 27,500. The other alternative method is this is 41,250. Then labor will be 27,500. Then overhead cost, since we've calculated here is 25,000, write 25,000. The last one is 12,000. That's another way. Just write 4 items and then present it. That is also 1,057. So that is another alternative. Either ways we can do that. I think with that we come to the end of forecasting techniques. The forecasting techniques part of it is done. With that, since 147 also we finished, now comes what is budgetary control. We have few questions under budgetary control. Whatever are the questions which are there, let's take it up, and then maybe tomorrow we will start the next chapter. What is budgetary control? Budgetary control is with the help of the budgets which are prepared, if control measures are taken up, we call that as budgetary control. Control measures relating to what? See, when the performance, the actual performance is compared with the budgeted performance, if there are variations, variations are examined, observed, examined, and corrective measures are taken up. So that is budgetary control. If needed, the plans are also revised. Question number 148. I don't know whether it is there on screen. It's there on screen. Question number 145 says that a retailer has prepared the following budget for one country where it operates in 20 locations. So we see revenue, cost of sales, other operating costs, net profit. The retailer wants to test what impact would be seen on profit if revenue was to fall by 40%. It expects that it would save 400,000 on rent by closing stores, but would have to pay 250,000 in redundancy cost to affected staff. Cost of sales are believed to be 80% variable and 20% fixed. What would be the fall in profit for the year? Let's take it up to the Excel sheet. What impact would be seen on profit if revenue was to fall by 40%? So that's the point here. The revenue was to fall by 40%. It expects that it would save 400,000 on rent by closing stores, but would have to pay 250,000 in redundancy costs to affected staff. Cost of sales are believed to be 80% variable and 20% fixed cost. So here the cost classification, that costs are classified as variable cost and fixed cost. Let's look into what is a variable cost, what is a fixed cost. Variable cost is a cost which varies proportionately with the output or sales here. Now there is a prediction. The retailer wants to test, or no, there is a test which they want to take it up. So what is sensitivity analysis, what we learned? He wants to test to check with what would happen if the revenue would fall by 40%. So variable cost varies proportionately with sales, with revenue. So the variable component of the cost, we have two different costs which are mentioned: cost of sales and then other operating costs. So then there is something mentioned about that. We see that cost of sales, a portion of it is variable, a portion of it is fixed. So by definition of variable cost, we see that variable cost also should vary or reduce by 40% because sales is reducing by 40%. Fixed cost will not change. Fixed cost will remain the same. But out of the fixed cost also, they are assuming that they will be able to cut down on the fixed cost on account of rent as 400,000. It expects that it would save 400,000 on rent by closing stores, but would have to pay 250,000 in redundancy costs. So um, if they want to eliminate this portion of the cost, then it says that they have to spend 250,000. Cost of sales. Now we have to test about what is the impact it will have on the profit because of this decision. The decision is to test what if the revenue falls by 20%. Revenue is 6,800,000. So that is what is given. If that revenue is going to fall by 40%, so how much is that? So let's just check that. At present, it is given as 6,800. Let's take it as 6,800, exactly 6,800,000. If it falls by 40%, so it would be only 60%. Then we have to check about the variable component. Cost of sales 4,500 into 80%. Now this 3,600 will also reduce. 3,600 also will increase, will decrease by 40%. So less variable cost of sales. $3,600 into 60%. Fixed cost also, they are anticipating that fixed cost also will reduce by 400,000. So there is one less. 400,000 is the fixed cost. But because they are shutting down, or because they are closing down one unit or one something, uh, so on account of that, they have to pay something to the staff. It says that by closing stores, but would have to pay 250,000. So that's additional cost. So now redundancy costs are to be incurred. So we have to add that. This is 250, 2,500. Put this one as negative figures. The rest of the fixed cost, the rest of the fixed cost will be the same. It will be incurred. So this will not be eliminated. This will have to be continued. So we see that there is no mention about what is the nature of other operating costs. So other operating cost also um, sorry about this, but this one is not less. The other operating cost is totally 1,600. Out of that, we can, I should not be separating it. Other operating cost out of that, out of 1,600, the way all 1,600 will be incurred except 1,400 which can be eliminated. So let's club that and then present it. So here it will be minus 1,200 because this is eliminated. Their impact on profitability will be profit will increase by 400. So they would have to reduce only it is not an answer. What did I do wrong? Variable cost is proportionally fixed cost of sales will have to be reduced. Then it should be if we add it as 400.
Ma'am,
Huh?
I have a doubt in that variable cost of sales, ma'am. Why we are multiplying that 3,600 into 60%, ma'am?
Because the variable cost also varies proportionately, no? So it reduces. If 40% is the reduction in the sales, then we see that variable cost also will have to reduce by 40%. So first we need to know what is the variable component. Cost of sales is 4,500. Out of 4,500, we see that 80% is fixed variable component, which is 3,600. This will not be incurred as it is. It will be 40% less. So when it is 40% less, it will be only 60% of that. So 3,600 into 60%. Variable
Okay,
cost
ma'am.
varies proportionately, no? So that is the logic there.
Okay, ma'am.
Yeah. See, the other operating cost is 1,600. So this one, out of 1,600, it says that a part of it will be avoided. So it expects that it would say 400. 400 will be saved. So henceforth, they will be benefiting on account of 400. So here, add um, savings on rent, which is 400. They will not be incurring that. Less other operating expenses, 1,600. So if we account for all these things, we see that the profit has impacted to the extent of minus 430s, or the fall in profit. If one variable is changed, that is the sales revenue decreases by 40%. We see this is what happens, and there will be a decrease in the profitability as 430 minus 430 is the profit. decrease in profit is 430.
Won't that be the new profit and not the fallen profit? Because we have to minus it from the net profit to get a fallen profit.
We have revised the entire income statement. So every aspect of it we have revised.
Yes, ma'am, we have revised it to find the new profit. So if we were to find
Okay, overall, okay, this is decrease in profit. This is new profit. We have to this is revised profit. Got your point. The overall impact is what we have to find out. So what would be the overall fall in profit? As of now, it is 700. From 700, it has to go 700 minus 430. Yeah, thank you. Fall in profit. This is only the revised profit. Now fall in profit is at the present profit. Present profit is 700. The revised profit is minus 430. So we have changed or fall in profit is equal to 700 minus 430. Yeah. Okay, fine. We'll wind it up here. Tomorrow's class will start at 4 p.m. only. 4 to 6. Okay then. Good day.
Thank you, ma'am.
Thank you, ma'am.